Maruti Suzuki's profit zooms 47% and beats estimates. The Sensex and the Nifty extend record run ahead of the FOMC decision end at record highs. Most sectoral indices end in the green. SEBI may consider offering applications supported by blocked amount or ASBA as an option to retail investors, clarifies on reports regarding T+0 settlement cycle for July. Adani Energy's $1 billion QIP subscribed by 5 times received bids worth $350 million from domestic mutual funds. Bank of Japan hikes the benchmark interest rate to around 0.25% for the second time since 2007. Decision comes ahead of the U.S. Federal Reserve's policy announcement. Over 150 people are dead and more than 200 injured so far in the aftermath of the Wayanad landslide. The IMD forecasts heavy rain in the state for the next 48 hours, issues a red alert. More medal hopefuls today. Shuttlers Lakshya Sen and PV Sindhu advanced to the round of 16 of the men's and the women's singles draw at Paris Olympics. Lavlina Borgohain wins her round of 16 bout in women's 75 kg boxing category. Good evening and welcome. You're watching Profit 360. I'm Nupur Talwar Suri. Now let's begin with a quick check of how the global markets are performing. Now Wall Street rose sharply. The S&P 500 rose, the Nasdaq has advanced and the Dow has climbed. All eyes, of course, are on the Fed's monetary policy decision as rates are expected to remain steady. But the focus is on whether any rate cuts are actually on the horizon. Now the European markets also maintained an upward momentum. FOMC's decision will be followed by the Bank of England's monetary policy meeting on Thursday. Let's now look at how the Indian markets have fared today. The benchmark indices extended their gains for a fourth consecutive session. The Nifty gained almost close to 0.4%, while the Sensex was up almost 0.5%. Maruti, JSW Steel and HDFC Life were amongst the top gainers of the day. Apollo Hospitals and Tata Consumers were amongst the top laggards. Now, except for small cap indices, all other broad market indices closed in the green. And now on to the day's earnings. Two big auto companies reported their numbers for the first quarter, while M&M's Q1 profit fell on higher raw material costs. Let's go across to Tushar, who has more on this. Tushar, take us through the numbers.
Thank you, Nupur. So first of all, if you look at Mahindra & Mahindra, the net profit declined by about 5.3%. Revenue rose about 12% on the back of the stellar sales that the company has seen, about 25% higher compared to the previous year. Remember, this is the highest first quarter sales that the company has recorded in history. Apart from the raw material costs, in last year, the company had recorded a one-time gain that is not present this year, hence the decline in the year-on-year change in net profit. The company has a healthy EBITDA margin of about 15.2%, I'm sorry, with EBITDA growing at 15.9%. The company is confident of clocking these numbers going ahead as well. In the farm sector, the company, again, highest ever first quarter volumes, but the company believes that the cyclicality is still not complete. Growth is still some time away, despite the government introducing agri-focused measures in the budget. Finally, in terms of the new launches, the company is trying a system of price rationalization, reducing the prices of some models while introducing new models. The company is also looking at variant rationalization so as to reduce the pressure on the supply chain. The demand for the 3XO, the compact SUV, has been robust, while the company is confident of demand to come in for the 5-door Thar that will be launched on 15th August. Nupur.
All right, Tushar, thank you for that. And in fact, speaking at the media conference, Mahindra Tractor's CEO says that a good monsoon helped growth in the farm segment. He also went on to say that the demand for the XUV 700 remains intact.
July has been pretty good in most parts of the country, so most critical markets have been impacted positively, especially the West and South. The farm margins, and I'm focusing right now on the core tractor margins, just for clarity, core tractor margins are the margins we make out of our domestic tractor business plus exports from India. Doesn't include farm machines, doesn't include farm machinery, Powerall, and global subs. So that's gone up to a very healthy level of 19.7%, which is a 1% improvement in margin. You see the same on the farm standalone side. There was escalation and a shortage in chips availability, which had led to increased material costs, and 700 had a lot of chips. We've increased the capacity over since launch. So we started at 3,500. We hit 6,000 capacity. Now we're at 10,000. So there is a need and a desire to start leveraging our capacities. We expect this anniversary offer to have minimal impact on financials because we expect higher volumes. We expect the costs have already come down, and we will get operating leverage out of the higher volumes.
And in fact, addressing shareholders, the M&M chairman, Anand Mahindra, spoke about how the group will take on the challenge of creating jobs in the country.
We must also be aware of the important role the private sector plays in job creation. As emphasized in the Honorable Finance Minister's recent budget speech, increasing employment and skilling are key national priorities. While India stands to benefit from the reorientation of global supply chains in the post-pandemic world, our growth and prosperity must be driven by job creation. And I emphasize, this is a collective responsibility. And the Indian private sector has always partnered with the government in nation building.
Now, Maruti Suzuki's Q1 profit jumped by 47% and beat estimates. Tushar joins us on this now as well. Tushar, what can you tell us about these earnings? Looking pretty good, aren't they?
Definitely, Nupur. So the profit jump, that's about 47%, as you mentioned, was largely on the back of cost rationalization, favorable input costs, as well as forex. Revenue itself was up about 10%. That's on the back of the sales that the company saw. Sales actually rose about 5% year on year to about 522,000 units. Domestic sales were up about 3.8% year on year. Exports saw a jump of 11.6%. So net sales largely contributed entirely to the revenue jump that the company saw. Profits gained on the back of cost rationalization, favorable input costs, as well as the forex demand, so to speak, the forex market, so to speak.
Right, Tushar, thank you very much for joining us on that. Now, moving on, Tata Steel has also posted its Q1 earnings. The metal major reported a 75% jump in consolidated net profit at 960 crore rupees. Now, the company's revenue, on the other hand, fell by nearly 8% to 54,000 crore rupees. Margin, however, expanded by almost 4%, with EBITDA rising nearly 30% to 6,694 crore rupees. All right, now in a historic and unexpected move, the Bank of Japan has raised policy rates to 0.25%. It has also unveiled a detailed plan to slow down its bond buying. Pallavi Nahata is with us and has more details on this. Pallavi, give us the impact of this and how has it been received overall?
It's a historic move. The Bank of Japan has raised interest rates to 0.25% from 0 to 0.1%. That's by a 7-2 vote. And it projects inflation to stay close to its 2% target. This move takes its short-term policy rates to levels that are unseen since 2008. Real interest rates, however, are still expected to remain significantly negative, and accommodative financial conditions will continue to firmly support economic activity. That's according to the Japanese Central Bank. It also said in its outlook that if realized, the bank will accordingly continue to raise policy interest rates and adjust the degree of monetary accommodation. Post this move, we saw a jump in the yen, which strengthened more than 1%. and rose to its strongest levels since March. Now, apart from having made this move, the central bank also unveiled a detailed plan to slow down its massive bond buying, taking another step towards gradually phasing out nearly a decade of huge stimulus. Earlier in March, of course, we had seen the BOJ end negative rates and bond yield control in a landmark shift from its radical stimulus program. So going ahead, these are interesting developments and leave a lot to watch out for, especially given the global central bank setup where we're actually looking at major central banks now gradually easing rates after a cycle of tightening.
So Japan quite the opposite, but Pallavi also, now the Federal Open Market Committee will be announcing the monetary policy decision later today. What are the expectations on that one?
To summarize, the Federal Reserve is expected to maintain a status quo on its key rate. But what we're importantly going to be watching out for is its signaling in terms of a prospective rate cut happening as early as September. This is after months of speculation regarding when the Fed will actually start cutting rates. And while that's not likely to happen today, we're going to be watching out for what Jerome Powell says in his statement in terms of the rate cut cycle starting by its next meet. So far, policymakers have appeared a tad reluctant to cut rates and to commit to the timing of when they plan to start cutting rates. But recent economic data that's come out of the US has shown easing price pressures, with headline inflation gradually moving towards the Fed's target. So that's what we're going to be watching out for today. The Fed will, of course, announce its policy decision today, and next week is the RBI MPC. So that's going to be giving us some cues on possibly where the RBI too could move from here on.
All right, Pallavi, thank you very much for joining us with that. Now, in fact, to talk more about the expectations and the impact of a possible rate cut in September, we now have Jonathan Schiessl joining us. He's the Deputy Investment Officer of Westminster Asset Managers, joining in from London. Hi, Jonathan. First of all, do you expect the Fed to keep the rates unchanged despite retail inflation in the US essentially having fallen steadily closer to the Fed's 2% target inflation number?
Absolutely. I think I'd agree with your the analysis you've just given. It seems very likely that the Fed will signal easing will be imminent, but obviously probably in this meeting it's just a bit too soon. I mean, the Fed chairman has been very consistent in his messaging, and I think a rate cut now, even, despite today we also had some data, some fairly weak data on the jobs market, which would indicate that things are continuing to cool in the US. So we think that won't sway the decision to a cut imminently, but obviously would agree with you that it's more likely next month, or in September, sorry.
Right, absolutely. So in that sense, are you keenly watching the commentary that could come from the Fed on a prospective rate cut in September, and how do you see that impact?
Yes, no, absolutely. I think most of our indicators are suggesting the US economy is continuing to slow in a fairly gradual fashion that justifies a rate cut in September. Real rates obviously are quite positive in the US, as they are in many European countries as well. So there is some room to cut rates. We do, however, internally think that inflation probably will be stickier than many market participants expect. So probably after a September cut, we'll get a period of waiting and watching before we get further cuts.
And of course, now while the US Fed is likely to move in the opposite direction, the BOJ's increased interest rate to 0.2%, now shifting perhaps to a tighter policy. What's your take on that? And also, what's your, we're expecting the Bank of England to hike rates tomorrow.
Yes, so I think the Japan move is as you mentioned previously, fairly significant. Obviously, the easing back in the bond buying as well perhaps wasn't, on the scale of their reduction in bond buying is perhaps the bigger surprise. Obviously, what markets are looking out for is with Japan raising rates and with cutting rates in the US, that interest rate differential is beginning to narrow. So everybody's looking out to see if the huge amount of Japanese investments that are overseas begin to return home, because that would have a profound effect on exchange rates and liquidity globally. So that's probably the most important decision. So we're keeping a fairly steady eye on that. And then, as you mentioned, we've got the Bank of England rate decision, which is expected to be a cut, not a rise. And that's probably going to be a cut and a hold again after that as well.
And finally, what's your sense on crude? Of course, tensions in the Middle East are only increasing, and you think we are moving into a more dangerous sort of territory now?
I think if you look at the fundamentals in the very short term on crude oil, there's probably a little bit too much supply sloshing around, and we've got in the short term a little bit of a few new projects coming on stream as well. And you combine that with continuing fairly weak data out of China, a gradually slowing US economy, and probably crude deserves to be a little bit further south than where we are today. But clearly geopolitical issues are at the fore, and oil as such is a very good hedge for most portfolios from a geopolitical risk perspective. So, with geopolitical risk remaining very high, crude oil does look fairly well supported, despite the underlying fundamentals probably calling for the price to come off a little bit.
All right. Thank you very much for joining us and sharing your insights on that. So, in fact, the current tensions in the Middle East have only been escalated by the killing of the Hamas chief Ismail Haniyeh. He was killed at his residence in Tehran. Now, this is a major turning point in the war between Israel and Hamas, which began in October of 2023. But who was Ismail Haniyeh, and how do you see the impact on this? Here's a look at the controversial figure.
Born in 1963, Ismail Haniyeh was one of the most influential figures in the landscape of Middle East politics. He had a degree in Arabic literature from the Islamic University of Gaza. During the first crackdown on the Palestinian uprising in 1989, Haniyeh was imprisoned for 3 years by the Israeli army. In December 2005, Haniyeh was elected to head Hamas. Under his leadership, Hamas won the Legislative Council elections in the months that followed. Another election followed in 2006, and Hamas won again, making Haniyeh the Prime Minister of the Palestinian Authority government. However, he was removed from his position within a year by President Mahmoud Abbas due to the political rivalry between Fatah and Hamas. Recent reports showed that Haniyeh was leading Hamas from Qatar and Turkey. He had been taking part in negotiations mediated by Egypt, Qatar, and the US. Haniyeh lost his sister and her family in June to an airstrike by the Israeli army. He also lost 3 of his 13 sons in April.
Well, time for a very short break here on Profit 360. But when we come back, we bring you all the updates from the Paris Olympics. So stay with us. And welcome back. Adani Energy has executed the largest fundraise in the country's energy space. The QIP was subscribed 5 times. Now, the company aims to raise $1 billion. The QIP demand is pegged at around 43,000 crore rupees. This marks the largest fundraise in India's energy space. The QIP participants include GQG, QIA and ADIA. Well, as young professionals starting your career, managing finances can be a bit overwhelming. How much should you save? Where should you invest? From today, we are starting a series of videos on personal finance. Today, we discuss the emergency fund. Why do you need it and how do you start saving for it?
An emergency fund is your financial safety net. It is money set aside to cover unexpected expenses like medical emergencies, car repairs, or even job loss. Think of it as your financial cushion when life throws you a curveball. But why is an emergency fund necessary? Firstly, it helps you avoid debt. When unexpected expenses arise, having some money put away means you won't have to swipe the credit card or borrow at high interest rates. Secondly, it provides peace of mind knowing you have a financial buffer which allows you to focus on your career and personal life without constant worry about what-if scenarios. So the question arises, how much should you put into your emergency fund? Experts suggest that putting away a sum worth 3 to 6 months worth of living expenses is a good idea. This might sound like a lot, but you can start small. Set a realistic goal, like saving 1 month's expenses first and gradually build up. For example, let's say your salary is 40,000 rupees per month and your monthly expenses, including rent, groceries and transportation, totals around 30,000. This means you need to put away 90,000 rupees in your emergency fund. You can start by saving 2,000 rupees per month every year and gradually increase the savings amount when possible. Within 5 to 6 years, you'll achieve your goal. Here are some tips to help you get started. Firstly, automate your savings. Set up a direct transfer to a separate savings account. Secondly, cut unnecessary expenses. Identify areas where you can reduce spending, like eating out less or cancelling unused subscriptions. By taking these small steps, you can build an emergency fund and watch it grow.
Well, over 150 people have died and about 186 others have been injured after a series of landslides hit Kerala's Wayanad district amid heavy rain. Now, hundreds more are feared trapped, with government agencies carrying out rescue operations in these affected areas. Several families have reported that their loved ones remain untraceable. The army has successfully evacuated more than 1,000 people from the affected areas so far. Around 600 personnel from the NDRF, the army, the state police, forest officials and volunteers have been carrying out rescue operation. Now, the UPSC has cancelled Pooja Kherkar's IAS selection and barred her from future exams after discovering that she falsified her identity to take the exam multiple times. They found her guilty of faking her identity to take the exam. Pooja Kherkar's number of UPSC attempts could not be detected, as she's not only changed her name but her parents' name too. On the 18th of July, the UPSC had issued a show-cause notice to Kherkar, directing her to respond by the 25th of July. But now her provisional candidature has been revoked. Well, news just coming in. Infosys has received demand notice for GST evasion of over 32,000 crore rupees. Haripriya joins us with more on this. Hi, Haripriya, take us through the details, please.
Right. Infosys is being investigated by the Directorate General of GST Intelligence for the alleged division of over 32,000 crores in integrated goods and service tax. The time period of is from July 2017 to 2022. The company has set up branch offices outside India for the purpose of carrying out business.
All right, I'm afraid that's a very patchy connection that we have with Haripriya. We're going to try and get her back in just a bit and reconnect to her. But the initial information that we are receiving right now is that Infosys has received a demand notice for GST evasion of over 32,000 crore rupees. Now, let's shift focus to the Paris Olympics. Day 5 was fruitful for the Indian contingent after Lavlina Borgohain won her pre-quarter bout in the women's 75 kg and Shrija Akula registered a hard-fought victory over Singapore's Jian Zheng. Now, India's next set of events at the Olympics, of course, involve the Indian boxer Nishant Dev, and he will be fighting in the 71 kg category against Ecuador's Jose Gabriel. After winning the last game on a high note, the hockey team will be playing against Belgium. Now, after the exceptional performance in shooting by Manu Bhaker, India's women's shooting team will be playing the 50-meter qualification match. All right, let's go back to the news that's just coming in. In fact, Infosys has received a demand notice for GST evasion of over 32,000 crore rupees, and Haripriya joins us now. Haripriya, you were taking us through the details. Please carry on.
Right, so it's being investigated by the Directorate General of GST Intelligence for the alleged evasion of over 32,000 crores in integrated goods and service tax. This is according to the internal document that was accessed. The time period of this evasion is from July 2017 to 2022. The notice says that the company has set up branch offices outside India for the purpose of carrying out business, and under the IGST Act, these offices would be treated as distinct entities from the company, and all the services rendered by the branch offices would be treated as import of the service and attract IGST. It also said that the investigation is still under process and the case is being built, and the company can either expect a visit from the DGCI officials or demand for information and summons later.
And any response coming in from Infosys?
As far as no statement from the company, we're still waiting for them to respond on this.
All right. Thank you very much, Haripriya, for joining us with those details. With that, it's a wrap on Profit 360. Thank you very much for joining us.